But Monday, could be a Black Monday. I mean, we had 2 down days, Thursday and Friday. It's a long weekend. Who the hell knows what's going to happen? Maybe Trump will up the ante on China and retaliate again, because as far as I know, China came back with a 34% tariff. Trump hasn't matched that. It's like a poker game, and they keep throwing these tariffs, into the pot. I'll see your tariffs and I'll raise you, right? What's Trump going to do? He's going to re-raise the Chinese. So who the hell knows? Because we're going to be in a recession. Look, I can't even believe you got all these economists that say, well, the recession odds have ticked up a bit. Now they're 30% or 50%. I mean, come on. The Atlanta Fed has got the Q1 GDP at minus 2.8. And Q1 is over. We didn't have a trade war in Q1. We didn't have a bear market in stocks in Q1. I mean, so if we were in contraction without all this bad stuff, how's the economy going to expand in Q2? In fact, if you look at what happened today in the markets too, I didn't go over this, but oil prices collapsed. They dropped. They were at $71.70 2 days ago. They're down to $62.60. Why did oil price collapse? Because of global recession. The Australian dollar down 4.5% today. It was up 1% yesterday, down 4.5%. Why did it go down so much? Because it's sensitive to commodities, and commodity demand goes down in a recession. Copper was down 9% today. What? I mean, that's because the markets are pricing in global recession. Silver was down 7% too. I mean, gold was down like $80, which was about 2.25%. Right? So people say, hey, gold went down. It's not a safe haven. It's still closed above 3,000 for the third week in a row. And the S&P was down 6%. So gold was down a lot less than the S&P, even though it's gone up a lot more than the S&P. So its purchasing power held up. You can almost buy 3 times as much, because S&P went down 6, gold went down 2, right? So gold gained a lot of purchasing power. You buy 4% more stocks today than you could yesterday with an ounce of gold. But why does silver get clobbered? Because of the industrial part. Everybody is pricing in a recession. Bond yields. Now, the yield on the 10-year is now below 4%. 3.99, I think, but just below 4. Now, the 30-year is at 4.41. So the yield curve is really steepening. But why? Why are rates going down like that? Because of recession, right? They're pricing in global recession. There are people that actually think that maybe Trump is doing this on purpose. He's crashing the stock market on purpose. He's creating a recession on purpose so the Fed will cut rates. Right, this is his game plan, right? I mean, what an asinine plan if that's what he actually has. But people are hoping, okay, now the Fed can cut rates because inflation is coming down. Because look at oil prices, look at bond yields. This now gives cover for the Fed. We just need unemployment. Unfortunately, the jobs report we got today was better than expected, right? So the market didn't get what they're hoping for. But I think there are a lot of layoffs coming in the government. They didn't show up in this report because they were still working when they began the report. You see, if you're working for 1 day during the period, even if you're laid off at the end of the period, you still count as being a job. So so we'll see some government layoffs next month, but we're also going to get a lot of other layoffs because businesses are going to start laying people off because they're going to know that their demand is going to collapse because all the prices are going to go up. Now, there might be an initial rush because some people might rush to the store to buy stuff before, the shelves are gone because the stuff that's already in the country escapes the tariffs. And I know from these huge trade deficits we've had over the past couple of months, there was some tariff front running going on. So you do have some inventory that people can buy. Now, some smart businesses will already start jacking up their prices because they'll realize this is their last chance to sell products. Because once they run out of inventory, the replacement inventory is going to be too expensive for the customers to buy. So that might delay some of the decline. But, I think we're going to see a lot more weak economic data. But I think the markets are wrong. I don't think this is a global recession. I think it's a global disruption, but the world is going to be better off, assuming that we can actually get the world to stop supplying us with consumer goods and the world keeps their own goods. The world will be better off. If the world stops buying treasuries and US dollar denominated debt, the world will be better off, especially the emerging markets. So, what Trump may have succeeded in liberating in Liberation Day is the rest of the world. They've been liberated from the burden of supporting the US market. Now, they may have to pay for their own defense, right? Because that was part of the trade-off. Hey, you keep our dollar as the reserve currency. You lend us all this money to buy stuff, and if anything happens to you, we'll send our military, we'll send our aircraft carriers, and we'll take care of your problem. But if we're saying, hey, we're not going to protect you unless you pay, well, all right, well then, if we're going to have to pay for our own defense, then why are we supporting your entire economy? Why are we sending you all these consumer goods and buying all your bonds at these low interest rates? So I don't think if the dollar goes back to what it was doing, right? The dollar was way down yesterday. It only rallied in response to China with the retaliation. And I think that's because people are worried about a slowdown in China. And China's a big buyer of commodities. But you know what? I think the world's got it wrong. It's America that's going to slow down dramatically. I think without having to drag the weight of the U.S. consumer, the world will prosper. So I think after some hiccups, as I said, and I've made this analogy before, it's like World War II. During World War II, at the end of the war, 1944, it became obvious that we were going to win. There were a lot of politicians or a lot of economists at the day that were concerned about what would happen to the economy when the war ended, because all of our factories were making stuff for the war. We were making weapons. We were making tanks and bombs and fighter planes.
Post-war economic shift and China's adjustment. Support, 10 million, 20 million, I forget, troops in Europe and Japan. And what were these troops going to do? They were going to be jobless, right? What was going to occur to them? And of course, what they overlooked is that before plants were producing tanks, they were producing cars. Before they were creating arms, they were creating sewing machines and laundry units. We still had the facilities, we just repurposed them to create different items. And when the conflict concluded, we didn't have an economic collapse. We had an economic surge, because we ceased producing weapons and began producing household goods. And so, we just, redirected our industrial ability from military to consumer. When all of our plants were manufacturing explosives, consumers were lacking products. We were rationing items. It was difficult to purchase anything in America in 42 to 43. Everything was limited because all the supplies were directed to the military. So Americans endured to help secure victory. Well, it's the identical scenario currently in China and globally. They've got all the production centers. They're making goods for us, just like we were using our facilities to produce for defense. So, if they're no longer going to manufacture items for us, they still retain the factories, they still retain the workforce, they still possess the logistics. All they need to do is modify what they're producing, and in several instances, they don't need to modify. You don't believe individuals in China desire washer dryers or dishwashers, or you don't believe Chinese children desire to play with toys. Of course they do. I mean, perhaps the toys are somewhat altered. Perhaps they're going to appear Chinese rather than American. So, you adjust the mold slightly. Yeah, maybe there's a plant manufacturing American flags. Okay, they produce Chinese flags. But many of the goods will remain similar. Some of the goods might vary, but what's the issue? China's capacity to transition to fresh demand. Our plants were capable of shifting from creating vehicles to creating tanks, right? So if you can execute that transition, the Chinese factories, they possess all of this equipment, all of this groundwork that we no longer possess. See, China's dilemma is not only simple but enjoyable. And the rest of the globe? All they need to do is consume what they manufacture. Simple, enjoyable. We must determine how to produce what we consume. If we don't produce, we can't consume. So, what's simpler? To utilize a facility that's already functioning and modify it slightly to generate something somewhat different, or shipping lanes. Instead of sending something to America, you direct it elsewhere. That's not too complicated. Our mission is what's challenging. We have to construct production centers from zero. We have to rebuild logistics from scratch. We must develop absent infrastructure. And we must instruct laborers. I mean, the workers in China who are currently producing goods can continue producing, or they'll manufacture slightly altered products. But we don't have anyone producing these goods. So, we have a monumental challenge before us that is going to necessitate a vast financial commitment that we are unable to undertake if we're sustaining this enormous administration simultaneously. Obstacles for the U.S. in developing infrastructure. So we face a massive moment of truth. They have a celebration arriving. They have a release. They have affluence. And that is the very core of my entire financial approach. To possess businesses outside the United States that will gain from the rise of the worldwide middle class when they are no longer supporting the U.S. So, that's what's on the horizon. And again, the issue that I encounter with all of this, I want to accomplish what Trump intends to accomplish, but I know it's not going to succeed. Because Trump is not being honest with the people about the hardship that's necessary. He's promising us everything will flourish. And when it doesn't flourish, we're going to revert to the usual issue of generating currency, QE, unnaturally low interest rates, right? Trump is requesting low interest rates. Low interest rates are part of the issue. That's why we carry these massive shortfalls. We don't promote saving. If we don't have savings, we can't make the financial commitments to construct the production centers. And so we rely on international facilities that outsiders construct with their own savings. And so we rely on external savings. And we rely on foreign products. We are the nation that's been exploiting the globe, not the reverse. Prospects in overseas holdings and market activity. But anyhow, I think this is a deception. The decline we saw today in international equities, the rise in the dollar, the drop in gold. This is all just another chance to relocate capital out of American assets, which remain significantly overvalued. Even though they've decreased, they've still got a substantial descent ahead. But overseas holdings still have a substantial climb ahead. The dollar has a substantial fall ahead. So remember, visit euro.com. Gold equities fell around 9% today, 9. Insane. Now, they had risen almost 30% this year, so they're still performing well overall. But in a single day, they gave up a third of their gains. If you can still acquire them this affordably on Monday, do it. Even if they drop further, who cares? But Monday, could be a market crash. I mean, we had 2 negative days, Thursday and Friday. It's a prolonged weekend. Who knows what's going to occur? Perhaps Trump will escalate matters with China and retaliate again. Because, as far as I'm aware, China responded with a 34% duty. Trump hasn't matched that. It's like a card match, and they keep tossing these tariffs into the pot. I'll match your tariffs and I'll raise you, right? What's Trump going to do? He's going to outbid the Chinese. So who knows? It could be a drawn-out weekend. Bitcoin and its trading trends. By the way, Bitcoin remains steady. People are making a big issue out of the fact that Bitcoin actually climbed slightly today. I believe one reason that Bitcoin rose was because gold slumped, and it's inversely related to Bitcoin. Now it's directly related to the Nasdaq, so it should have declined. But Bitcoin is already in a downtrend. It's fallen 25% from its peak. But you know what? I wouldn't be shocked to witness Bitcoin experience a delayed fall over the weekend, which would actually be very troublesome for many of the individuals who own the ETFs, because they're going to have to endure it. If they got misled into acquiring Bitcoin today, oh look, it's a secure option, it's not falling. Look, Bitcoin, right? If Bitcoin collapses on Saturday or Sunday, they have to just observe it. And they have to wait until Monday morning to access any funds. So we'll see. I think those people were prematurely celebrating because gold dipped one day and Bitcoin rose.